The long nightmare and housing could be over, at least according to our very own David Wessel. There have been a number of false dawns here, but you seem to have some compelling evidence that we maybe turned that corner that everyone's been waiting for.
That's right, Simon. I mean, housing experts, so-called, have been predicting the end of the housing bust, saying that housing has bottomed for some time now, some of them because they have evidence and some of them because they like to get attention. What's different now is the data really are compelling. House prices are rising in most communities. The number of new homes being built is increasing, 26% more in May than a year ago. The stock of unsold houses on the market has come down. The contribution of home construction to GDP has been positive for the last 4 quarters. I think we can now see the market ever so slightly beginning to turn up at last.
At last, and I know a lot of people would be very happy about that. One thing that we've talked about a lot is that there's never been a recovery in the U.S. economically unless we have had housing recover, and this is all since the end of World War II. Is this going to really help? Is this going to help the economy overall, do you think?
Well, it's definitely a positive, but just like the recession was very unusual, the recovery is very unusual. Usually in recoveries, the Fed cuts interest rates, mortgage rates go down, and you get a boom in housing. We're not going to have a boom in housing. Housing is still far from healthy. 60% fewer new home starts in May 2012 than in May 2002. But it will be less of a minus. It means that housing will reflect the overall pace of the economy instead of continuing to drag it down, which it has been doing for the last 5 or 6 years.
Well, that is good news. One of the things that you mentioned in your pieces and just a moment ago, in fact, was that the inventory of foreclosed homes that was on the market was quite small. But there's something else, isn't there, called the shadow inventory. Houses that are in the foreclosure process but haven't hit the market yet. Is that something that could perhaps precipitate another leg down?
Yes. Basically, what economists, both in and out of the government, look at is the stock of houses that are for sale now, whether because they're been foreclosed on or just for regular reasons, and they look at the number of vacant houses that are on the market. Both those have come down almost to normal levels. But one reason for that is that this huge stock of shadow inventories, you call it, these foreclosed homes on the books of the banks, have been very slowly trickling onto the market, partly because the foreclosure process has gotten pretty clunky. If they continue to trickle onto the market and demand picks up, then we will be okay. If something changes and we suddenly get a flood of houses onto the market, then yes, the trends we see that are very promising could reverse. But one really interesting thing is that there's a lot of investment buying, we're told. People buying houses not to live in them, but to rent them out, including by some institutional investors. So that suggests that demand is really beginning to pick up, and that's key to recovery in housing.
Well, and that's all very, very positive. One other thing, what about if we go into another recession, and the calls that we might go into another recession are growing louder now? Not from everybody. Some people just see very slow growth. But what if we do? Is that really bad for housing?
Yes. Okay. You know, fewer jobs, fewer income means less people can afford to buy a house. We just did a new survey of economists, the Wall Street Journal, as you may know. We found that the economists we surveyed put the odds of a recession at 1 in 5 now. That's up a little bit, but still not the most likely outcome.
Okay, we have to leave it there. Thank you very much, David Wessel,
Welcome.
Economics editor here at the Wall Street Journal.